Welcome back. We're 14 minutes short of closing out the session, not just for the day, but for the week as well, which has been very disappointing. 61.63 on the Nifty right now, the lowest point of the day. I want to quickly, run through the November WPI data, which is expected. Poll sees the WPI numbers coming in at 7.1%. This is the 8-month high. If it comes in closer to 7% in the month of October, and now the November data is expected to come in a notch higher than that. Remember, the CPI numbers were a shocker, more than 11%, and that's giving a signal to the WPI also coming in on the higher side. No relief seen in primary articles due to higher vegetable prices. There could be an increase in the prices of manufactured products. Fuel inflation likely to remain high, and the continued diesel price hikes will have an effect on the inflation and continue to keep the inflation at elevated levels. So one more data point to watch out for, which does not look like it could give out a very encouraging picture. That's the rupee versus the dollar, down about 0.5% right now at 62.14. Ambareesh Baliga is joining us on the phone line right now. Quick take, Ambareesh, from you. We're ending this week. It's been disappointing after creating a record high. How do we approach the next week?
Absolutely, it is disappointing, especially looking at the macro data which has come out. But then I would like to discount that to a certain extent and say that possibly this is a buying opportunity for those who had missed out on the rally earlier. I mean, that rally from 5,200 levels to 6,400 levels. Because whatever macro data has come out, especially the inflation data, is for November. And we have actually seen that at the ground level in December, we are seeing that the food article prices are in fact coming down to a certain extent. So inflation should taper off in December. So from that point of view, I'm not too worried.
So for clients, what's the advice right now? Just to stay on the sidelines till there's more clarity in what the RBI does, till more clarity and guidance comes about what the Fed intends to do?
Not really, because I really don't see that rate hike being more than 25 basis points, despite the sort of figures which we have seen for November. Basically on the argument that possibly the December figures may be much lower than what we have actually seen for November. So I think, from that point of view, we may not have a 50 basis point hike. I think that will be limited to about 25 basis points. But yes, that tapering fear is still there for Fed. I think that should also play out to a certain extent, but then I would say that utilize that as a buying opportunity, because we have the next 5 or 6 months of a decent bull run based on the elections which will be there in May, June next year.
Which stocks should one look at then to capitalize the most in the next 5 to 6 months, like you said?
I would say the underdogs which were there for the last couple of months, especially the banking, the infrastructure, the cyclicals, the industrials, I think these are the ones to be looked at, because that's where the value is. And I see those stocks outperforming going ahead as compared to possibly a IT, pharma or a FMCG.
Okay. What about banks?
Banks, that's what I said. I think banks is one sector which will, should perform going ahead, along with capital goods, infra, and the other stocks which the other sectors which I had mentioned. I forgot to mention metals. I think metals is the other sector which I think should really play out very well. We have seen some of those stocks performing in the last 2 months, but I see that rally continuing.
Okay. Any names you want to pick out from them, from these packs that you just mentioned?
For capital goods, it is still the big boy L&T. Along with that, I would look at the smaller ones like Crompton Greaves and Voltas, where we have seen some spark in the past couple of weeks. In the banks, among the smaller ones, we are looking at DCB. The mid-sized ones is IndusInd, and among the larger ones, we are looking at HDFC Bank and Axis. In the private sector. In the public sector, we are looking at PNB and SBI. I think these are the best picks as far as the banks are concerned.
Anything you're underweight on?
We are not really underweight on any sector at this point of time, since we are really looking at the markets, the Nifty possibly going to levels of about 6,800, 7,000 in the next 5 to 6 months. So from that point of view, you will have certain sectors underperforming, but we are not really bearish on any of the sectors. To a certain extent, yes, possibly in the reality space, we may not see, that sort of a movement. But the other sectors, I think we should see extremely good sort of appreciation. But like I said, IT, pharma, and FMCG could underperform to a certain extent. Since we are expecting the like Nifty to go up about 10 to 12% from these levels, possibly you'll have these sectors underperforming to a certain extent.
Got that. Ambareesh, thanks very much. Quick comments coming there from Ambareesh Baliga with his views there. Shardul Kulkarni and Sanjeev Basin are here with us.